You know, people come into this business thinking it's the easiest way in the world to make money. They see a few charts, read a few headlines, and suddenly they think they've cracked the code. But let me tell you something. There's no easy trading. There never was, and there never will be. Now, before I dive into this, if you remember the previous video on how I finally started winning 8 out of 10 trades, you'll recall that I talked about discipline. That inner edge that separates a gambler from a trader. Today's talk ties right into that, because the illusion of easy trading is what destroys discipline faster than any losing streak ever could. Let me ask you something. Have you ever sat in front of a chart, seen a nice clean trend and thought, that's easy money? Be honest, we've all done it. I did it too, in my early days. You look at a stock running up 5 straight days and your fingers itch to jump in. But the market doesn't reward impatience. The market rewards understanding. And understanding only comes from pain, from losses, from learning what not to do. You see, easy trading is a mirage. It looks close, but every step you take toward it, it moves farther away. That's because the market isn't about ease. It's about timing, temperament, and truth. You can't fake those. You can't buy them in a course or download them in an app. You earn them one mistake at a time. When you think trading is easy, you stop preparing. You stop studying the tape. You stop respecting the trend. And the moment you stop respecting the trend, the market slaps you hard enough to remind you who's in charge. Have you ever noticed how the biggest losses come right after your easiest wins? That's not a coincidence. That's human nature. Comfort is a silent killer in trading. Most people lose not because they can't read a chart, but because they read it through the lens of greed. The mind says, this looks easy. I'll just ride it up. But charts aren't maps to treasure. They're reflections of human behavior, fear, hope, hesitation, and desperation, all packed into those candles and bars. If you forget that, you'll keep falling for the same traps. Do you know why so many traders blow up their accounts right after a streak of winners? Because success blinds them faster than failure ever could. They start to believe the market owes them something. They start thinking they've figured it all out. That's when they stop thinking like traders and start behaving like dreamers. And a dreamer in the market is just another donation waiting to happen. You want to know the truth. The market doesn't care how confident you feel. It doesn't care how sure you are. It only reacts to pressure, buying pressure and selling pressure. The rest is noise. So when someone tells you trading is easy, ask them this: if it's so easy, why isn't everyone rich? I've seen men lose fortunes because they refused to admit how hard this game really is. They looked for shortcuts. They chased tips, signals, chat rooms. Anything to avoid the hard work of reading price and volume, of watching the behavior of the market day after day. They wanted certainty where there is none, and when the market turned against them, they didn't know what to do. In my years trading, I learned this. Every easy-looking setup carries hidden traps. The clean breakout, the perfect double bottom, the textbook pullback. All of them can fool you if you don't understand the context. You have to ask yourself, who's buying here? Who's selling? Is this movement real, or is it just bait? Most traders never ask those questions. They just see a pattern and jump. Do you remember in the last video when I said I started winning more because I stopped trading so much? That ties right into this. The illusion of easy trading makes you overtrade. You think opportunities are everywhere, but real opportunities are rare, and they never look easy. When a trade feels too simple, that's your cue to slow down and look twice. The most dangerous thing a trader can feel is comfort. When you feel comfortable, you stop calculating risk. You stop protecting capital. You stop listening to that small voice that says, wet, something doesn't add up here. Comfort breeds carelessness, and carelessness kills accounts. You might be thinking, but Jesse, isn't trading about taking risks? Yes, but calculated risks, not blind ones. The illusion of easy trading makes you take blind risks because it tells you the market is predictable. It whispers, you've got this figured out. That's the voice that ruins men. I've heard it myself more times than I'd like to admit. Ask yourself when you win, do you study why you won? Or do you just celebrate? Most traders celebrate. They think their strategy worked because they made money. But a good trade can still lose, and a bad trade can still win. The money doesn't prove the method. The market is full of lucky fools. For a while. But luck runs out, and only skill remains. The illusion of easy trading is seductive because it feeds your ego. It tells you you're smarter than the crowd, that you can outguess the market. But the truth is, the market isn't a puzzle to be solved. It's a river to be read. You don't conquer it, you move with it. You learn its rhythm, its moods, its tides. That takes patience. That takes humility. Ever wonder why the best traders always sound cautious, even when they're making millions? It's because they've seen the market humble better men than themselves. They've learned to respect uncertainty. They don't call trading easy, because they know every day brings a new lesson. And most of those lessons come with a price tag. You can make money trading, yes. You can build wealth if you have the discipline, but not by chasing ease. The market rewards effort, observation, and restraint. You build your fortune the same way you build your chart, reading skill. Slowly, steadily, one correct decision at a time. Every tick on that screen is a test of your patience, not your intelligence. If you still believe trading is easy, ask yourself this: why do professionals spend decades studying it? Why do the best in the world still lose sometimes? The answer's simple: because the market's not a machine. It's a living crowd, and crowds are unpredictable. Once you understand that, you stop looking for easy trades and start looking for good ones. And that's the moment, the precise moment, when you start trading like a professional, not a gambler, because you're no longer chasing the illusion, you're studying the reality. The illusion of easy trading blinds traders to market reality. It's the soft voice that whispers in every beginner's ear, telling them that this game is simple, that charts make sense, and that making money is only a few clicks away. That illusion has ruined more traders than any bear market ever could. Because once you start believing trading is easy, you stop respecting what makes it difficult. And that's the first step toward losing. When you first step into the market, everything looks so clean, so predictable. You see a pattern repeat, a breakout here, a pullback there, and you think you found the secret. Maybe you win a few trades right away. It feels good, the kind of good that makes you think you've figured it out faster than everyone else. But that's the market's trick. It gives you a few easy wins to build your confidence, then takes it all back when you let your guard down. Have you ever noticed how that happens? How your best week is often followed by your worst? That's not bad luck. That's the illusion shattering. Trading only looks easy because the charts are clean in hindsight. After the move has happened, everything lines up perfectly. You can trace the entry, the breakout, the pullback, the confirmation, all of it. But in real time, nothing's clean. The candles are messy. The volume's uncertain. Your emotions get loud. Your confidence wavers. And in that fog, most traders make decisions they'd never make if they were calm and detached. The illusion of easy trading disappears the moment you face the live market. And yet, so many never learn that until they've lost their capital. This illusion blinds you in another way too. It makes you think the market owes you something. You put in the hours, you read the books, you study the charts, and you believe success should be quick. But the market doesn't pay you for effort. It pays you for accuracy and discipline. The trader who wins isn't the one who works the hardest. It's the one who sees the truth clearly, without ego, without illusion. Ask yourself, how often do you see what you want to see in a chart instead of what's actually there? That's how the illusion grips you. Not through lies, but through comfort. I've seen it in my own trading, time and time again. You get a few clean wins, and suddenly you feel invincible. You start increasing your position size. You stop setting stops. You enter trades on impulse because what looks obvious. But the market doesn't care about obvious. The moment you stop respecting the risk, it takes it all back with interest. Every easy trade you think you see is the market testing your patience, your humility, your understanding. And most traders fail that test. The illusion also makes you underestimate what trading really demands. It's not just clicking buttons and watching charts. It's sitting still when your instincts scream to act. It's cutting a loss before your pride tells you to hold. It's taking small profits instead of waiting for miracles. It's doing the hard, boring, methodical work. Journaling, analyzing, reviewing, even when there's no excitement in it. Trading isn't a game of action, it's a game of observation. But the illusion makes you crave movement. It makes you think the more you trade, the more you'll earn. The truth is the opposite. You want to know the biggest difference between amateurs and professionals. Amateurs look for easy setups. Professionals look for real setups. And most of the time, that means waiting. Waiting for confirmation. Waiting for the market to show its hand. Waiting for the right price, the right volume, the right timing. It's boring work. It's hard on the nerves. But that's trading. Easy trading doesn't exist because every move involves uncertainty, and uncertainty never feels easy. The illusion hides the truth behind the comfort of a clean chart and a confident thought. The danger is, once you fall for that illusion, it changes how you think. You stop respecting probability and start chasing certainty. You start thinking there's a formula, a shortcut, a single indicator that will make trading effortless. But no formula replaces judgment, and no indicator replaces discipline. Every trader wants to believe there's a secret edge that makes this game easy, but the only real edge is in your ability to control yourself when things get hard. Do you remember when I mentioned in the last video how I finally started winning 8 out of 10 trades? That didn't happen because trading became easy. It happened because I stopped expecting it to be easy. I learned to accept difficulty as part of the process. When you stop expecting the market to cooperate, you start trading what's actually there, not what you wish were there. That's when you begin to see clearly. That's when the illusion starts to fade. The illusion of easy trading is powerful because it feeds hope. It makes you believe you can turn a small account into a fortune overnight. It makes you feel smart, in control, chosen. But the market doesn't care about your feelings. It doesn't reward hope. It rewards patience. The sooner you understand that, the sooner you stop being blinded. Ask yourself right now, are you seeing the market as it is, or as you want it to be? Because that's the question that separates a trader who survives from one who disappears. The illusion of easy trading blinds you to the real work, the quiet, unglamorous effort that builds skill over years. It's the difference between playing with the market and learning how to live in it. Every easy-looking setup hides a trap. It's the market's oldest trick, the kind that keeps repeating itself because traders never stop falling for it. You look at a clean chart, a perfect formation, a breakout that seems obvious, and you think, this is the one. But that's the moment the market tightens the noose. Because what looks easy to you also looks easy to everyone else, and when everyone sees the same thing, the real professionals are already waiting on the other side of that trade. You've probably seen it. A stock breaking out of resistance, volume rising, everything aligning perfectly. It feels textbook. You enter without hesitation, proud of your timing, already counting your profits. Then, just when you start to relax, the move reverses. A sharp drop. A trap. You sit there wondering how something that looked so obvious could turn against you so fast. That's the danger of the easy setup. It invites you in with simplicity and punishes you for believing in it. Have you ever noticed how the market always seems to fool the largest number of people? That's not coincidence. That's design. The market's job is to shake the impatient, the overconfident, and the careless. Easy-looking setups are the bait. They appeal to the part of you that wants certainty, the part that says, I've seen this pattern before. I know what happens next. But patterns don't make money. Understanding does. A chart formation without context is just a shape. Until you know who's buying, who's selling, and why they're doing it, you're just guessing in a fancy way. The most dangerous thing about an easy setup is not that it fails. It's that it sometimes works just long enough to convince you it's reliable. You win a few trades with the same pattern, and suddenly you start trusting it. You stop verifying the context, the market condition, the volume structure. You stop asking questions. You assume the same setup will deliver the same result every time. But trading doesn't work like that. What works in a trending market fails in a choppy one. What works with strong volume dies in low liquidity. The market changes its mood faster than most traders change their opinions. Think back to the last time you saw a setup that looked too good to be true. Did you pause? Or did you jump right in? Because that pause, that one moment of hesitation, is often what saves professionals from the traps that catch everyone else. Most traders can spot a pattern, few can spot the trap behind it. That's the difference between seeing the surface and understanding the depth. A chart is like a conversation between buyers and sellers. Every candle is a sentence, every volume spike is an exclamation, and every fake breakout is a lie. The market speaks, but most traders don't listen. They interpret. They look for what they want to hear, not what's being said. That's why the traps work so well. The easy setups feed your expectations. They promise movement. They give you comfort. They make you believe the market is predictable. But have you ever wondered why professional traders always sound skeptical, even when a setup looks perfect? It's because they've learned that the market rarely gives you what you expect when you expect it. You might remember in the last video on how I finally started winning 8 out of 10 trades, I mentioned that my turning point came when I stopped trading every signal I saw. That lesson connects directly to this, because the more obvious the setup, the more cautious I became. If a chart looked too clean, I waited. I wanted to see who was really behind the move. Was it genuine demand, or just retail traders jumping in too late? That habit of waiting saved me from countless traps. Easy setups fail because they attract attention. The crowd piles in. Stops cluster in the same areas, and where stops gather, manipulation follows. Big players know where retail money hides. It's not a mystery. So they create false moves to trigger those stops, to flush out weak hands before the real move begins. That's why the market often fakes a breakout before making the actual one. It's not random, it's deliberate. It's how the market clears the board before starting the real play. Do you know how many traders lose because they can't stand missing out on the obvious move? The market flashes a breakout, and they chase it because they can't bear to be left behind. But in trading, missing a trade is far better than being trapped in one. You'll have 1,000 more opportunities to enter, but only one account to protect. Easy setups make you forget that. They make you act emotionally, fast, impulsive, careless. That's when the market strikes. A true professional doesn't fall in love with a pattern. He studies it, tests it, questions it. He knows that even the best setup has a failure point. He knows that confirmation matters more than conviction. When something looks too good, he steps back and asks, who's getting fooled here? Them or me? Most of the time, it's the latter. The trap doesn't just take your money, it takes your confidence. It makes you doubt your skill, your system, your edge. That's the real damage, because once you lose confidence, you start forcing trades to win it back, and the cycle repeats. The illusion of the easy setup feeds the illusion of control, both equally deadly. Ask yourself, how many times have you been caught in a trade that looked perfect? How many times did you tell yourself, it can't go against me now, right before it did? Those moments teach you more about trading than any winning streak ever will. Because that's when you finally understand what the market truly is. A place built to test conviction, not comfort. Every easy setup hides a test. The market doesn't hand out profits for seeing what everyone else can see. It rewards those who look deeper, those who understand that behind every pattern is psychology, and behind every price move is intent. Until you start thinking like that, you'll keep falling for the same traps, dressed in different charts. Trading is not about ease. It's about reading behavior, not predicting prices. That's the first truth most traders learn only after they've paid for it with real money. Everyone comes into the market wanting to predict. They think if they can just find the right formula, the perfect indicator, or the secret combination of signals, they'll always know where the price will go next. But the market isn't a math problem, it's a mirror. It reflects human behavior, fear, greed, hesitation, confidence, all in motion. And once you understand that, you stop trying to predict and start trying to read. Most traders don't fail because they lack knowledge. They fail because they misread emotion. They look at price, but not at the reason behind price. They see a green candle and assume strength. They see a red candle and assume weakness. But it's not that simple. Sometimes a green candle is exhaustion. Sometimes a red one is just a shakeout. The market doesn't move in straight lines, and it doesn't reward those who expect it to. Have you ever noticed how, right when something looks clear, the market does the opposite? That's not a coincidence. That's the crowd reacting, and the market feeding on their reactions. When you try to predict, you're really trying to control. You want certainty in a place where certainty doesn't exist. But reading behavior is different. It's about observation. It's about noticing what people do, not what you think they'll do. You watch the price, the volume, the momentum, and you ask yourself who's acting here. Are the buyers strong, or are they hesitant? Are the sellers confident, or are they panicking? Every candle tells you a story, if you know how to listen. In my years of trading, I learned this the hard way. I spent too much time trying to be right about the next move, instead of understanding the move that was already happening. I'd predict the breakout, the reversal, the trend shift, and the market would laugh in my face. But when I stopped predicting and started studying the tape, everything changed. I realized the market doesn't care about my opinion. It doesn't reward the smartest guess. It rewards the most accurate reading. Do you remember the previous video on how I finally started winning 8 out of 10 trades? That turning point came when I began focusing on behavior instead of prediction. I stopped saying, the price will go here, and started saying, if the market behaves this way, I'll act accordingly. That small shift changed everything, because now I was reacting to what the market showed me, not forcing it to fit my narrative. Traders who try to predict prices often end up fighting the market. They buy too early, they sell too late, they hold through reversals because their prediction told them they're right. But the market doesn't care who's right. It only cares who's adapting. Reading behavior keeps you flexible. You're not married to a direction. You're loyal to observation. You trade what you see, not what you hope for. And that's the difference between a professional and a dreamer. Think of the market as a crowded room. Everyone's shouting, buying, selling, reacting. Some are scared, some are greedy, some are desperate to make back what they lost. Now, if you stand in the middle of that chaos trying to predict who will shout next, you'll get overwhelmed. But if you just watch, listen, and study the flow of noise, you'll begin to notice patterns. The rhythm of behavior. You'll see how people act when prices rise too fast. How they hesitate when uncertainty creeps in. That's what reading the market means. It's not fortune telling. It's people watching. The reason so many traders lose is because they think charts are about numbers. But charts are about psychology. Every spike, every dip, every consolidation zone is a reflection of collective emotion. The chart is just a visual record of human habits. Predicting price means guessing the future. Reading behavior means understanding the present. The first is gambling, the second is trading. Ask yourself when you take a trade, are you reacting to what's on the screen or what's in your head? Most traders react to their expectations. They imagine where the price should go, but the market doesn't care where it should go. It only moves where pressure forces it to move. Reading behavior means following that pressure, tracking who's in control at every moment. You stop asking, what will happen next? And start asking, what's happening now? And every trader has a moment when they realize prediction is an illusion. It's comforting, but it's false. You might be right a few times, but you'll never be consistently right. The market shifts too fast, too often. The better skill, the real skill, is learning to recognize the shift as it happens. Reading behavior means you're watching for transitions, strength fading, weakness building, accumulation starting, distribution ending. You don't have to know the next move. You just have to recognize when the current one changes. When you focus on behavior, you see the market for what it really is, a stage for emotion. The bulls push until they run out of strength. The bears attack until they lose momentum. Somewhere between the two lies opportunity. But you can't see it if you're predicting. Predictions blind you because they make you defend your ideas instead of reading new information. You start ignoring signs that contradict your view, and that's how small losses become big ones. Every great trader I've ever known had one thing in common. They read behavior better than anyone else. They didn't try to be prophets, they tried to be interpreters. They studied reactions, how price responded to news, how volume changed at support, how traders behaved when fear spiked. They weren't chasing certainty, they were analyzing pressure. That's what makes trading real. Not easy, but real. You can't control the market, but you can understand it. And understanding begins with watching, patiently, quietly, without bias. That's what separates prediction from reading. Prediction feeds your ego, reading builds your edge. The more you observe, the more fluent you become in the language of price action. You start to feel when something's changing, when the market's tone shifts. That's when you stop gambling and start trading. Have you ever watched a chart and just felt that something was off, even before the move came? That's not intuition, that's recognition. That's your mind picking up on behavior patterns it's seen before. You can't reach that level by predicting. You reach it by watching, learning, and respecting the fact that the market always knows more than you. Comfort and overconfidence are the silent killers of trading accounts. They creep in quietly, disguised as success, and before you know it, they've taken control of your decisions. Every trader feels them at some point, usually after a streak of good trades. That's when you start to think, I've got this figured out. It feels harmless, even deserved, after all the work you've put in. But that moment of comfort is the most dangerous moment you'll ever face in the market. In trading, comfort dulls your instincts. It makes you careless. You stop watching the small signals. You stop questioning your setups. You stop respecting risk. The same habits that built your success begin to fade because comfort convinces you that you don't need them anymore. You start thinking you're above the rules. That's when the market teaches its harshest lessons. Have you ever noticed how your biggest losses often come right after your biggest wins? That's not bad luck. That's comfort turning into overconfidence. Overconfidence is different from courage. Courage means taking a calculated risk after preparation. Overconfidence means taking a blind risk because you believe you can't lose. It tricks you into trading larger, holding longer, ignoring your stops, and breaking your plan. It makes you forget that the market is bigger than any trader. The moment you start feeling invincible, the market reminds you that it can humble anyone. Every trader who's been in the game long enough has felt that sting. When you're comfortable, you stop learning, you stop observing, you stop adapting. You begin to think the market will keep behaving the way it has been. But the market never stays the same. It shifts constantly, testing your patience and your perception. The trader who's comfortable doesn't see the shift coming. The trader who's humble does. Comfort is blindness disguised as confidence. I remember early in my career, after a long run of winning trades, I started feeling untouchable. My setups were working, my entries were sharp, and my timing felt perfect. I told myself I'd cracked the code, so I started increasing my position sizes. I ignored the little signs of weakness in the tape. I didn't tighten my stops because I believed my analysis was enough. Within a few weeks, I gave back nearly everything I'd made. It wasn't the market that beat me. It was my comfort that blinded me. Ask yourself, how do you behave after a win? Do you feel calm and focused, or do you feel powerful? Because that feeling of power is the trap. It makes you trade to prove yourself right instead of trading to make money. You start seeking confirmation instead of truth. You interpret every candle as validation of your skill. And once you start trading from emotion, you're no longer reading the market, you're arguing with it. Comfort also makes you forget the fundamentals of risk. You stop managing exposure because you think you're will protect you. You start adding to losing positions because you believe they'll bounce back. You start convincing yourself that the market will reward your patience, even when your analysis is wrong. That's not trading. That's wishful thinking dressed as confidence. The best traders in the world never feel completely comfortable. They stay alert, skeptical, ready to adjust. Comfort means you've stopped respecting uncertainty, and trading is nothing but uncertainty. You might remember in the last video how I finally started winning 8 out of 10 trades. I mentioned that my consistency came when I stopped forcing trades and started protecting capital. That's directly tied to this. I learned to fear comfort. Whenever things felt too easy, I pulled back. I'd review my trades, cut my size, and remind myself that every winning streak has an expiration date. That habit didn't just save me money. It saved my mindset. Overconfidence also warps your perception of risk and reward. When you're overconfident, small profits don't feel satisfying anymore.